Hello everyone, and welcome back to the channel. Today we re-diving into a topic that has been gaining a ton of attention in the online world. Binary trading. You might have heard about it, seen ads, or maybe a friend mentioned it. So what exactly is it? Is it a quick way to get rich, or is there more to the story? Let's break it down together in this complete beginner's guide. First things first, what is binary trading? The name itself gives us a big clue. Binary means having two parts. In the context of trading, this means you're making a prediction on one of two possible outcomes. Will the price of an asset go up, or will it go down? Will a stock hit a certain price point by a specific time, or will it not? It's a simple yes or no proposition, which is why it attracts so many beginners. Unlike traditional trading where you buy an asset and hope its value increases over time, binary trading is all about short-term price movements and your ability to predict them correctly within a set time frame. Let's use a simple example. Imagine you're looking at the price of gold. Right now it's at $1,900 an ounce. You believe that in the next 5 minutes, the price will rise above $1,900. So you place a binary trade. You decide how much money you want to risk on this prediction, let's say $10. If you're right, and the price of gold is even a fraction of a cent above $1,900 after 5 minutes, you win the trade. You get your initial $10 back plus a predetermined payout, which is usually a percentage of your investment, say 70 to 90%. So you could make $7 to $9 in profit. However, if you're wrong and the price stays the same or goes down, you lose your initial $10 investment. That's the core concept, a fixed risk and a fixed reward, all based on a simple yes or no outcome. This simplicity is the main appeal. You don't need to worry about complex concepts like stop losses or how much the price moves in your favor. It doesn't matter if the price skyrockets or just barely nudges past your target, a win is a win. This makes the entry barrier seem incredibly low. The assets you can trade are also vast. We're talking about everything from currency pairs like the euro versus the US dollar, to stock market indices like the S&P 500, to commodities like oil and gold, and even individual company stocks like Apple or Tesla. The expiration times can also vary dramatically, from as short as 30 seconds to minutes, hours, or even a full day. Now let's talk about the exciting part, the potential for profit. The high fixed returns within a short period are what draw people in. The idea of making an 85% return on your money in just 1 minute is undeniably tempting. If you become skilled at analyzing charts and predicting short-term movements, you could theoretically string together a series of successful trades. This potential for rapid gains is a powerful motivator. For someone who understands market trends and can make quick, accurate decisions, binary trading can seem like an efficient way to generate income. Imagine you have a solid strategy and you win more trades than you lose. Over time, those consistent, small wins could add up to a significant amount. This is the dream that many platforms sell. However, we absolutely must talk about the other side of the coin, the risks. And this is where you need to pay very close attention. The simplicity that makes binary trading attractive is also what makes it incredibly risky. That fixed reward also comes with a fixed, and often total, loss. If your prediction is wrong, you typically lose your entire investment for that trade. Notice the payout structure. If you win, you might get an 80% return. If you lose 100% of your stake. This slight imbalance means you need to win significantly more than half of your trades just to break even. For example, with an 80% payout, you'd need to win about 56 out of 100 trades to be profitable. That's a lot harder than it sounds, especially in volatile markets. The short time frames also add to the risk. Market prices can be incredibly erratic in the short term, influenced by noise rather than genuine trends. Trying to predict what a stock will do in the next 60 seconds is often closer to guessing than it is to strategic analysis. It can be very, very easy to get caught up in the excitement, placing one trade after another and quickly lose a substantial amount of money. This emotional aspect is a huge risk factor. A couple of losses can lead to revenge trading, where you place bigger, riskier trades to try and win your money back, which almost always ends badly. It's crucial to understand that this is not a get-rich-quick scheme. The potential for fast losses is just as real, if not more so, than the potential for fast profits. So, how can you approach binary trading more safely if you decide it's something you want to explore? First and foremost, education is key. Don't just jump in. Learn about market analysis. There are two main types: Technical analysis, which involves reading charts, patterns, and indicators to predict future price movements. And fundamental analysis, which involves looking at economic news, company performance, and broader market trends. Most short-term binary traders focus heavily on technical analysis. Spend time learning about things like support and resistance levels, moving averages, and candlestick patterns. The second crucial step is to use a demo account. Almost every reputable broker offers a practice account funded with virtual money. This is your sandbox. Use it to test your strategies, get comfortable with the platform, and see if you can be consistently profitable without risking any real cash. Treat it like real money. If you can't make a profit on a demo account, you definitely won't make a profit with a real account where emotions are involved. Spend weeks, or even months, practicing until you have a proven strategy that works for you. Third, and this is non-negotiable, is risk management. Never, ever trade with money you cannot afford to lose. This means no rent money, no tuition funds, no grocery budget. Only use disposable income that you are fully prepared to part with. A common rule of thumb is to never risk more than 1% to 2% of your total trading capital on a single trade. So if you have $1,000 in your account, your maximum trade size should be $10 to $20. This ensures that a string of losses won't wipe out your entire account, giving you a chance to recover and learn from your mistakes. Choosing the right broker is also incredibly important. The binary options space has unfortunately had its share of scams and unregulated platforms. Do your homework. Look for brokers that are regulated by a recognized financial authority. Read reviews from multiple independent sources. Check their payout percentages, their withdrawal policies, and their customer support. A good regulated broker will provide a fair trading environment and won't make it difficult for you to access your funds. Be wary of platforms that promise guaranteed wins or use high-pressure sales tactics. To sum it all up, binary trading is a high-risk, high-reward form of trading. Its simplicity is both its greatest strength and its biggest weakness. It offers the potential for quick profits based on simple up or down predictions. But it also carries the very real risk of rapid and complete losses. It is not a passive investment. It requires active learning, a solid strategy, disciplined risk management, and emotional control. It's not for everyone, and it's certainly not a guaranteed path to wealth. If you're considering it, please approach it with caution and a commitment to education. Start with a demo account, learn everything you can, and only ever risk what you are prepared to lose. Remember, the goal in any form of trading is to stay in the game long enough to become profitable. Thank you so much for watching this beginner's guide to binary trading. I hope this gave you a clear and balanced view of what it's all about. If you found this video helpful, please give it a thumbs up and consider subscribing for more content on finance and trading. Drop any questions you have in the comments below, and I'll do my best to answer them. Stay safe, trade smart, and I'll see you in the next video.